for us today. And Donna, I've been talking to for quite a while, and so they have some great stuff that they're going to show you this morning, so give them your attention and thanks for coming.
This is Melissa.
Thanks for breakfast.
No problem. Yeah, Donna and Melissa are kind of my marketing agents, and Donna you will see quite a bit. We call her persistently pleasant. She stops in. Our agency is a B2B agency. I'm going to give you a quick 30-second sales pitch. For what we do is we provide realtors and lenders, I'm going to call it superior service because it is. If you guys send us houses to look at, you're out with a client, they've got 4 or 5 properties, you're not sure, you can shoot us all of the property information to SWFL on Dean Street. 7 or 8 gals in the office get it, including me. Donna and Melissa also get it on top of the staff in the office. They start immediately working on it and looking at the underwriting side of it. A lot of stuff happens, whether, how was the roof, how was the house, any updates up on LIPA or, Collier County's appraiser site, and try to get that information for you guys real quick. Flood zones and everything to help you maybe identify which property, your client may be leaning one way or the other, because I really don't, I don't mind a fixer-upper, but I don't want something that's going to cost me, an extra, $2,000 a year in flood insurance and $4,500 a year in homeowners insurance, and then I got to put a new roof on as soon as, I close. So we pride ourselves on getting right back to you guys within the first half an hour of shooting us over the information. I try to do everything via email. It creates a great trail. So that's why we use that distribution list for the SWFL at Dean Street. I tell everybody, I'm not here to get your business. I'm here to show you that we can earn your business, but we're also a resource. As many times as you send us stuff in, we're going to keep sending you quotes. We keep sending you information. Whether you give us the policy, we don't get the policy, doesn't make any difference to us. Our business model is just go forward, provide service to the realtors and the lenders, and that's our job. If we don't get the policy from the client or whatever happens, I kind of look at that as, maybe, we didn't get the best price, we didn't do something correctly, that's our problem. So we just try to help. If anybody needs me for anything, if you want, my cell number is 239-728-8332. That's my personal cell. Nights, weekends, you're out with a client on the weekend, text me. Everybody loves to text. I love text. I can answer in the movie theater. It doesn't really matter.
Could you repeat that number?
239-728-8332. Again, think of us as a resource. Think of us as a partner resource company for you. The service, you'll love the service, you'll love the attention Donna and Melissa and everybody in the office will give to you guys. So I'll do a couple quick things on some flood insurance, a little bit about homeowners insurance, a little bit about auto relating to realtors, and then questions and answers for anything you guys want to talk about. I will say I do love what you guys done with the place. This place is beautiful in here. I hope you don't mind I use some of that really stiff hair gel in the bathroom. It works. So we'll start with the flood insurance side of this. This goes into the changes that came into effect in April. I don't know if anybody's been running into this. We do have new surcharges. They weren't raising rates. Remember, they went through the whole thing with the National the National Flood Affordability Act that kind of put the stay on the Bigger Waters Act. But now they've added some surcharges that have come in now that are, a couple of them are pretty substantial. The first surcharge is on a primary residence on a flood policy. Everybody is going to get a $25 service charge added to their policy for renewal. So if you guys have flood insurance or your clients have flood insurance and it's their primary residence, it's a $25 surcharge. It's not too bad, but if you have folks that have an investment property, it's their secondary property, which that's a big market we have down here for investors and secondary, not primary residences, or non-primary residential is what they call it. It's a $250 charge at renewal.
So if a condominium building has flood insurance, basically if it houses 30 buildings, it's going to be 30 times 250?
I have to go to a couple pages back. In condo associations themselves, they pay how many units are in there, and they've back. I don't know the actual numbers on them specifically. So it is, I think, almost on the last page. Oh, here it is. The policy fees, okay, for condominium associations. 1 unit's a $45 fee, 2 to 4 units, and I'm sorry, if you go to page 6.
Oh, I see, okay.
So they tiered them for the units.
Okay.
Now, a unit owner with a flood policy pays that fee. If it's a unit owner for an HO6 policy, they pay $25 if it's their primary. If it's not their primary, they pay $250. So that's substantial for a condo owner's policy. We have some condo owner policies that are, under $600.
I thought though, if it's in a flood zone, it's included in the condo association pays.
It has to do with condo docs and has to do with lenders. On a condo association, if the condo association says we cover everything including the unit owners, they can write a policy that way. Okay? If the condo docs and the board only write the building and the common areas, that unit owner has no flood insurance for their contents, for inside their property. So which means in the condo, and there are a couple different verbiages inside some of the old condo docs the way they did it, but traditionally, in probably 90% of the condo docs, everything from the back of the drywall in is the unit owner's responsibility, okay, for coverage. So what would happen is if they only do the outside of the building and there's a flood and it damages the inside of the property, it's going to be on your renter, your homeowner's insurance, or your condo owner's insurance, or your renter's insurance, depending on what you have inside that unit. That being said, if you don't have flood coverage, you don't have coverage if it does flood damage. We battle back and forth with the lenders because they require people on the second, third, fourth, fifth, sixth floor to have flood insurance, and I mean, they probably should have tsunami insurance, not flood insurance. I don't know how, some of these buildings that you're on the third floor, and you're talking 3 floors, it's 36 feet. I think we got bigger problems when, if a flood comes in that does 36 foot tidal water. It's just not the way it works for us.
Yeah.
So the lenders sometimes, and you guys have to deal with this, when you're trying to get to the closing table, they make those requirements. Same thing happens with lenders when you have waterfront property or high dollar land property that maybe only has a $300,000 house on it, but it's $1.2 million purchase. And the insurance company can only insure the $300,000 house. They can't insure the land. So we run into that a lot of times with the bank, the lender, and then I end up getting in the middle of it because that's a PMI issue for mortgage protection, not for, rebuilding the home. So lenders create a lot of confusion in flood and in, the property side for us. And we work really good with combating, the lenders on when they ask for things that are ridiculous. Something else we do, when we give you guys quotes, or anybody quotes, we give a stripped down quote, and then we give a full coverage quote where we should be. And we do that because we were losing a lot of business ourselves because we never offered anything lower.
Yeah.
And then you get people that do a low quote, and then by the time it comes to closing, 3 days before closing, they get the revised quote that they're looking for, and it's, significantly higher.
Yeah.
So we don't even get into that. So a lot of times what that does is creates dialogue between the owner and us to explain what the vast difference is between, these two policies, and they have to know, they're pretty savvy, people buying homes, they go, it's got to be a coverage thing, right? The one that's cheaper can't cover me for as much as this one. So at least gets us to start educating them on, their insurance coverage. Back to flood, sorry. So the surcharges are the big thing that they put into effect. And multifamily residential, it's $250. Again, condominiums or other buildings. So they charge that for the building is only $250. And that is a per building. Okay, and then they have the other fees. Correct. So they don't call them increases, they surcharges and fees. I think anything that we get that says affordable on it doesn't work that way. There are some new deductibles now. As of April 1st, we can now go up to $10,000 on the deductible. That can save up to about 40% on the premium. So just by raising that deductible, they can save some money on that. The other thing for your buyers, they don't have to have contents coverage on flood. So if they want, you know, the house and they say, you know, the flood's a little bit high, we'll run it with and without contents for you. So this way you can say, okay, well, I see that, you know, it's $2,100, but now it's only $1,300, and I save $700, because dollar for dollar value is how they rate the policy. So the $250,000 minimum coverage or maximum coverage that they'll give you on a home, and banks go with that no matter what the price of the house is. They'll go with that $250,000, which is kind of outside what they normally do. So we can save the clients a little bit of money on that too, and even yourselves. You know, when I do these sessions, it's also, you know, let's think about our own policies that we have. You know, if you want to save money on, you know, your flood insurance, you can take the contents off. You can, you know, have your agent run that and see what kind of discount you get on that. Same thing when we get into the homeowner side, actual cash value on your contents can reduce your premium significantly on your homeowner's insurance. It just means that you're not getting new for old furnishings. It means that you get them at a consignment shop, like Craigslist or, you know, garage sales for your contents. So a lot of times I have customers that, you know, going through, you know, 09 and 10 that were really trying to save some money. We kind of, you know, counsel them on that and say, listen, you can do this, but do yourself a favor, don't lower your car insurance. You know, we're out in our cars every day. We do have some premium increases that are coming out, and with that, they're staying at what they negotiated before with Congress, which is at a 15% increase max on your residential, and then a 18% up to 25% on the non-primary policy for the home. They have added some policy fees on the federal policy fees. So we've got a $22 policy fee if you're in the preferred risk, which is the kind of what we call the non-flood zone, even though everywhere in Florida is a flood zone. The non-flood zone areas. And then all of their policies get a $45 fee. And the same with when they remap them into special hazard areas, it's a $45 policy fee. Now,